Got a question? Got a comment? Get straight talk from Mike Robertson right now at 713-785-1817.
Welcome back, folks. Well, we have one of our favorite guests on because I don't think I know anybody that knows more about gold or thinks more about gold than my next guest, Ranting Andy, actually, Hoffman, CFA. He is marketing director with Miles Franklin. For a decade, he was U.S.-based buy-side and sell-side analyst, most notably as institutional investor ranked all-service analyst at Solomon Smith Barty from 1999 to 2005. And I think that he really likes gold. Welcome back, Andy.
Oh, it's great to be back, and you got that right. There is no one who lives gold more than I do.
I don't think so. Yeah, I mean, in fact, back in the day, you used to be a junior mining analyst, did you not? Is that one of the hats you wore?
No, actually, when I was on the sell side, it was all oil field service. I did that for 7 or 8 years. But I've done all kinds of things in the mining sector as well.
Yeah, that's right. You were a consultant to that sector. I
right.
Apologize. You're right.
Mm-hmm.
Okay, what do you think of gold right now? You know, I noticed it was going to be up about 7 clicks this morning, but it doesn't seem to be reacting as much as a lot of people. You know, there are a lot of people out there that follow gold now. It probably has gotten more attention over the last couple of years than it's ever gotten. But it doesn't seem, you're around here around 1,700, high 1,700s. Doesn't seem to be reacting to what looks to be a very serious international situation. I mean, we're not healthy. Europe's not healthy. China's not healthy. You would think that gold would be at $2,500, $3,000 an ounce. What's going on?
Okay, well, you're asking many different questions all at once. Well, First of all, the way that the listeners need to understand it is that gold is not an investment. Yes, mining stocks are an investment. If you own GLD, which I highly recommend against, or any of these paper investments, they are investments that go up and down. But when you talk about the actual bullion itself, which you know very well, it's money. So I think of it more in terms of what it's doing as far as purchasing power. For instance, against the Dow, for people who like to look at the Dow and say, oh, the Dow is up, etc., the Dow to gold ratio is now basically at the lowest it's been for the last 30 years. And, of course, compared to even commodities, gold has been rising, and now for the 12th straight year in dollars, it's higher. In fact, it's up 15% this year, and silver's up 27%. But more importantly, again, as it's money, it's not just money in the United States, it's a worldwide currency. So it's in almost every currency, it's near all-time highs. In fact, as we speak today, Euro gold, which I consider the world's most important market because there's 700 million Europeans, is within 0.5% of its all-time high. And rupee gold, that's 1.5 billion people, that's within 1% of its all-time high. So gold has been appreciating. It's certainly been appreciating more since we announced all of these monetary money printing measures by the ECB, the Fed, and the Bank of Japan. And I would be shocked if it doesn't challenge last year's highs in dollar gold, euro gold, and rupee gold in the coming weeks.
Wow, that's quite a prediction. So what's going to be the trigger that's going to cause that to happen? Is there anything specific? Because like this morning, the market's up this morning because it looks like Spain's, kind of working their situation out. I personally think it's a head fake and that it's not really going to happen. But is there a single trigger that could cause this to happen?
Well, the trigger, I mean, in bigger picture terms, started 40 years ago, and more importantly, for people who own it back in the turn of the century, when all of a sudden all of the money printing, the credit cards of the central banks of the world and the corporations, municipalities, individuals were started to get were fully charged up. So at that point, all the incremental debt simply created inflation, and as a result, we've been going up for 12 years now. But I mean, we were kind of held in check all summer long until the end of the summer when all these new QE things have been announced. And I mean, look, a month ago, gold was $1,570, and today it's $1,780. And silver spent the whole summer about $27, and now it's $35. So it's certainly moving now. And I believe, there's a guy named Jim Sinclair, I'm sure you're aware of. He's very vocal about how it's not going to take long before all this new money printing finds its way into the markets. And look, the fact that they announced all this money printing with markets near all-time highs, with oil near all-time highs, just shows you how desperate they are. And since the the response to all the money printing over the years has been inflation. It's hard to believe it's not going to accelerate from here.
Now, you've written a really interesting article, I think, a blog. First of all, before we go any further, how can people follow you? What's your blog? Let's tell them out there so the folks that are listening can write this down and
right.
follow.
Miles Franklin is one of the largest bullion dealers in America. We've been around for 22 years. If you go to milesfranklin.com, I write a blog 5 days a week for free, as does the founder of our firm, David Scheckman, 5 days a week for free. Our platform's education. You could just go there, look at the archive, or put your email in, and we'll send it to you every day.
Okay, great. All right, so I'll repeat that, by the way, folks. Any of you that are driving in your cars, I'll be repeating that at the end of the show today. All right, you wrote this really great article called Conspiracy versus Reality. I really love this. And you start, which is something I didn't know, that for 6,000 years, gold has been used universally as money. And then you talked about currencies that we've had. We've actually had a couple of currencies that you say, have really have just failed because of hyperinflation. The Continental currency during the Revolutionary War, and then during the Confederate dollar during the Civil War. One of the concerns now is that we have the possibility of getting back to a hyperinflationary environment. Do you think that this could lead to a failure of the fiat currencies around the world?
I think it's the only course of action. This is the reason I got into precious metals 10 years ago, and this is what I write about. And by the way, in the United States, yes, we lost those two currencies. We were about to lose Abraham Lincoln's greenback dollar, meaning the northern dollar, and if the Civil War went on another 6 months, we would have hyperinflated that one away too, because it was on the verge of it. But look, every fiat currency in history, and we're talking about dozens and dozens of them, have failed. In fact, just in the 20th century, there have been no less than 30 or 40 hyperinflations of currencies in real places. I mean, Brazil, Russia, China, certainly Germany, everyone knows about that one. They happen everywhere. And, I mean, it doesn't take rocket science to see what's going on here. Look at the debt of the United States. It was essentially zero in 1971. It's $16 trillion now and rising. And it's rising exponentially, and the same thing is happening everywhere around the world. There is no doubt these fiat currencies will fail, and I'm not talking about 10, 20 years from now. I mean, this is the end of the road. It's just a matter of how it happens and what time frame. Does it happen next week, next year, 2 years? I mean, it will happen, and until that happens, people are going to be rushing into real money because, like you said, it's been around for thousands of years. And the reason it's been around for thousands of years is there's a definition of money, and people don't understand that the dollar, the only definition, I mean, dollar is a currency, the only definition it meets is that it's fungible, meaning all dollars are the same, and that you can make change for it. But otherwise, it's not a store of value, it's not universally used, and it's certainly not scarce or verifiable how many dollars are out there.
So is there enough gold really to create a gold-backed currency again?
Well, sure. I mean, it's not at this price. First of all, finding out how much there is, I mean, it would take years and years to do that because no one will have trust anymore. The U.S. doesn't have its 8,133 tons of gold, and we'll never know how much they have, and the same goes for a lot of these central banks. And people aren't going to trust anything the government says for some time, so there will be a transition period that will be ugly. But the fact is, of course there's enough gold out there. There's 5 billion ounces of it have been mined over time, just not at $1,700 an ounce. If it's $10,000, $20,000, $30,000 an ounce, then you can simply match up the money supply that's out there with the gold that's out there. But that will take some time to happen.
Okay, so this is not going to happen overnight, and so it'd be a while before this happens. Listen, in this article that you wrote, and you touched a little bit on it just in your comments a few moments ago, you talk about the powers that be and what's going on, and I thought you really had some many interesting things to say about the Federal Reserve and how they manipulate the markets. Could you kind of talk to that a little bit to the folks of some of your thoughts about some of the manipulation that's going on by the central bankers and the politicians out there?
Right. Well, this has been my area of expertise for the past 10 years. In fact, I could safely say that I probably know more about gold manipulation. I've written more about it than probably there's probably a handful of people on earth that have done more. Look, it's very simple. I mean, I'm watching right now. They're doing the same thing that they always do. It spikes up at certain times of day, and then it's held down in the certain patterns at the same times of day. Look, the Exchange Stabilization Fund, which is an official government agency, it's a secretive one, but it's official. Their job is to manipulate foreign currency and gold and silver. That's their mandate. just like the president's working group on capital markets. Their mandate is to manipulate the stock market, and the Fed, with its quantitative easing and ZIRP and open market operations, their job is to manipulate interest rates. So there's nothing special about it, and there's been admissions left and right. I could show you the proof, but I mean, there's been admissions from Greenspan all the way back with Fed chairmans and the Bank of England governor and the Bank of International Settlements governors. This is what they do. They have to keep the confidence in the fiat currency strong, so they attack through paper, and that's why you hear about all the naked shorts and the J.P. Morgan short position in silver, because they naked short it to keep it down. The problem is their Achilles heel is physical demand, which we see as a bullion dealer is very strong. In fact, you've seen all these big smashes in gold and silver over the years. They happen all the time. Never big surges, always big smashes. But at Miles Franklin, for instance, last year we did $200 million of sales. 1% of that was people selling coins to us. It's always people buying. No one is selling. So when you see crashes, it's all in the paper market. It has nothing to do with reality. And we've seen supply shortages before. We saw it last year. We saw it in 2008. And we'll see it again no matter what they try to do with the paper price.
Do you think that that the moves of the Federal Reserve right now make any sense whatsoever? I mean, QE3 didn't work. I mean, QE1 didn't work. QE2 didn't work. QE3 didn't work. In fact, it looks to me like even the impact of QE3 has already really kind of petered out. I mean, it just doesn't seem to be a whole lot that's going on. And in the marketplace, we got a little boost and didn't get anything else. What do you think how can we resolve the problems that we have? And we're creating debt at a tremendous rate. Do you have any thoughts on how we can resolve the issues that we have out there?
Well, I'd argue that the stock and bond markets are also manipulated, so it's impossible to use them as a barometer anymore. But irrespective, QE1, 2, 3, the ECB, LTRO, MOT, all these things, they never work. They've never worked throughout history. There is nothing novel about what's being done today compared to what all the, as I said, hundreds of other fiat currencies have done. When you get to the end game, it's as Richard Russell says, inflate or die. I mean, if they stop printing today, well, everything collapses tomorrow. If they keep printing, it just collapses a couple of months or years later, except in a much more horrific way. There is, we hit a marginal, like I said, the credit card of everyone got charged up around 2000. From 1970 to 2000, people had a free credit card when we went off the gold standard. Now there's too much debt. The marginal, the diminishing return to the point now that the more debt that gets added on, the worse thing gets. And that's what they're doing by printing money. They're just adding more debt, more interest expense, and there's no chance it's going to do anything except create inflation.
Don't you think that we're just going to, but don't you think we're just going to inflate our way out of this? Because I remember, as you might remember from previous shows that you and I have been on with together, I was involved with the Hunts. I'm the last living silver broker, and so I remember all this very similar conversations going on in the late 70s as gold reached its previous high before these last several years, and of course ran up to 800, then backed off back down to below 300, and then silver ran to 50 and went back down to 6, and they inflated their way out of the situation. Do you think that's a possibility now, where they're just going to sit back?
No. This is not 1980. Like I said, from 1970 up until about 2000, we had no debt in 1970. The U.S. had no debt, so they could raise interest rates, which is the appropriate response to inflation. We had no debt back then. There was literally probably half a billion dollars of debt at the time. So they could do that. Now, not only can they not raise interest rates, they're lowering them to zero, to at least 2015. We're seeing negative interest rates. I mean, some people say don't buy gold because it pays no interest. There are actually negative interest rates someplace in the world, so gold actually does pay more interest than bonds. So the point is, no, there is absolutely, if you're asking me what could we do to get out of this, my answer is, and always has been for the past 10 years, nothing. They will keep printing money until the system collapses. There is nothing you could do except to protect yourself from it.
So you see no end to this other than a collapse. So you see no positive door to exit.
No, I see none.
No. All right. So what's the best way? We've only got about a minute and a half. Average investor sitting out there right now doesn't own any gold. What is the best way for him to participate in this market?
The safest way, because again, this is not about investment and quote making money. It's about preserving wealth. And the only way you preserve wealth is with the actual stuff. You buy mining stocks, maybe they go up, maybe they go down. For the past 5 years, they've been miserable. If you buy the real thing, and I'm not talking about GLD, which is a fraud, you own the coins, you store them away somewhere, you sit and you wait it out, and you watch other assets devalue against them, as they always have throughout history. Miles Franklin can help you do it. Just give me a call, give me an email, ask me any questions. Bye.
All right, so they go to milesfranklin.com, right?
Right.
All right. Andy, I love your opinions. I mean, you bring something fresh and different to the program every time, and I must say I hope you're wrong. I'd like to think there's another way out of this, but you may be absolutely right, and I think that everybody should have some precious metals in their portfolio. And I appreciate all that you do to bring this information and bring the word to us. So thank you so much for being on with us today.